Welcome to the NAMB Podcast, where we bring you the voices that drive the mortgage industry. Join dynamic hosts Ginger Bell and Matt Shields as they dive into bold conversations with top experts, industry leaders, and change makers from across the country. From insider insights to game-changing trends, this is your front row seat to what's happening right now in the world of home finance.
Well, hi there. Welcome to another episode of the NAMB Podcast. My name is Ginger Bell, and I have my co-host with me, Mr. Matt Shields. Hi, Matt. How are you today?
I'm doing great, Ginger. How are you today?
I am great. I'm excited to have you on here, and I know you have the pleasure of introducing our guest today.
Yes, we have a very special guest. We have Alex Temple. She's a partner from Mitchell Sandler, and we're so excited to have you here with us today.
Thank you. I'm excited to be here. Thanks for having me.
Yeah, perfect. So, Alex, thank you for hopping on. And one of the goals we had when we started the NAMB podcast was to be able to bring experts in the field to talk about those important topics that, really people need to pay attention to and know about. And so having your expertise and opinion and just things like that is important to be able to share that information. So, one of the things that if you don't mind, we're just going to hop right into, because I know it's a topic a lot of people are paying attention to, and that is what is happening with LO comp. So let's just hop right in there and talk about what are you hearing? What are you, in the field? What are you seeing?
Yeah, I think what we know so far is that the rule is up for review, and it's been a long time coming. We've all been sort of navigating the waters of LO comp together over the past, 12 years at this point, really trying to understand what the rules and regs are. We have the set of regs and laws that are specifically applicable to LO comp, and then we have all of the commentary, informal commentary from the CFPB. Things that come out by way of examination findings. Sort of the rule has been molded over the years, really, trial and error, I guess you could say. So we know that the rule is up for review. I think that's a great thing. I think it's time to take a step back and make sure that the rules are serving the purpose that they were originally put in place to serve, which is protecting the consumer, making sure that, consumers aren't being steered into loans that aren't to their advantage. And that hasn't always been the way that the rule has actually been interpreted and regulated as time has gone on, again, based on some of these ways that it's evolved informally. So I'm looking forward to seeing where it goes. What's going to happen, where we're going to land is very much up in the air. I don't think anybody has a really good pulse on that yet. But, we can make some guesses based on the way things have evolved. Again, from where I sit, I really hope that we get back to some of the basics, look at the rule itself, and make sure that it is firm enough to stand on, that we all understand what the expectations are, and how to appropriately draft contracts that are going to be beneficial not only for the consumer, but also for the lenders. We're trying to do a good job, trying to stay competitive in the market and trying to compensate loan originators in the way that they deserve for the work that they do.
Yeah, perfect. And, Matt, obviously, our audience, we know, are brokers. Mm-hmm. And so that's one of the big questions coming out of LO comp, because, LO comp obviously was part of Dodd-Frank, and it wasn't very clear as far as what that should look like in terms of compensation. And so, when we look at, especially our borrower paid, and Matt, how many, for you, as far as what you originate, how many loans do you think that you're seeing that they're coming out as far as borrower paid?
It really depends, depends on from client to client, how their situation is. I would say, honestly, about half of mine can be borrower paid when It's mostly like an investor situation. They don't want it built into the rate. They really want to just kind of pay it separately. So it really kind of depends from case to case. But what I'm seeing is, for me, a big concern will be if it is borrower paid across the board, that's really going to hurt the home buyer. That's going to hurt the person who's trying to save for the down payment. They're saving for closing costs. And to add another aspect on top of it, that just really hurts the affordability, I think, for a lot of people. So I think for some clients, like investors and things like that, might not be a big deal. But if it's just someone buying their primary residence first time, that could be a big impact to them.
Yeah. And again, I think that's, the first time around, I think the regulators tried to do a really good job of understanding the industry while they were writing the rule. But the way things worked out in practice when actually implementing the regs, the black and white language on the paper, it became really tough to implement that. And I think there were side effects, and you're explaining a side effect that could come about if they go that direction, with the clear delineation, the requirement of borrower paid for broker transactions. And I agree with you. My hope is that they try to understand the practical aspects of the way that they're papering these rules, and what that could look like for the consumer and for the lender.
So how does it grow? So we're at this crossroads right now where we have, regulatory insight, rules that are, we've adapted to through the CFPB, and now we're looking at that could be changed. So, what as a mortgage broker can they be doing to, first of all, keep themselves apprised of it, and second of all, to be involved to make sure that whoever is making the changes understands what the challenges are and how it can benefit the borrower, because at the end of the day, that's what we want. It's the protection of the borrower. It's making sure that they have the options. So how can a broker stay involved in that to make sure that whoever's making the changes is able to see all of the different aspects of it?
Yeah, I think keep an eye out for proposed rulemaking and commentary. Ask for requests for comment from the CFPB, and also make sure you're staying connected with advocacy groups. There's so many great advocacy groups in the industry right now who are using their voices, submitting opinions and commentary on these rules and the way that they're going to come out in the long run. So definitely stay connected. But I would say internally, one of the most important things right now is, the benefit of being a smaller shop is agility. So stay agile, make sure that you're not overcomplicating processes, adding levels of management or technology that you really don't need or don't understand, and maintain that agility so that as things start to shake out, you really can move quickly and adjust as needed. The hope is major adjustments won't be needed, that are going to, cost a lot of money and time in terms of, working with attorneys to update contracts or repapering agreements with borrowers or whatever the case may be. But it's likely that we're going to see some sort of, change that's going to necessitate working with a partner like a compliance team or an attorney. So shameless plug, obviously, connect yourself with an attorney who knows what they're doing and is but, I would say proactive, get involved with your advocacy groups, and clean up shop. Make sure that you really understand the way that you're doing business and the way that your agreements read today so that you're able to stay agile and move quickly.
Yeah. So, and then let's have a conversation about that, because we have seen in our industry a big influx of brokers who have been working for retail organizations and decide, you know what, I'm going to become a broker now. And so having that legal counsel, even though they may be smaller in size, is just as important, and maybe even more important now, in place. So, with that in mind, and I'm going to bring in some AI conversation as well, because, we have ChatGPT out there. And so, someone might say, hey, I can go into ChatGPT and have them draft the things that I need, and I'm going to be protected. What's the risk in doing that as a, independent?
Ooh, what a loaded question.
Alex.
Yeah. I would say, first of all, it is more important now than ever to make sure that you don't have to, go spend millions of dollars on legal advice or retain a firm and spend thousands of dollars a month. But, running things by a firm who is connected and understands, what is going on in the industry, how the rules are evolving is always important, especially, coming in as a broker. While it works for many people long term, there are lots of companies who like to evolve past the broker phase, whether it's non-del or going straight to retail origination. But the way that you progress, the way your compliance and your operations processes progress as you move through those various stages of origination and maturity as a company, are important. And there is a lot of risk associated with not, keeping pace with the way that you're progressing from a compliance standpoint. So I would say it's more important now than ever. When you talk about AI, though, AI is obviously the sexy buzzword topic, and I think it's a very important tool. It's where everything is headed. Probably everything that we know and love is going to be consumed by AI.
Yeah. Yeah.
But I like to view the sunny side of things, and it is a really, really powerful tool. However, we don't have firm regulations in most states, and certainly not federally at this point, regarding how we can use AI. But we do, and we are starting to see responsible use requirements come out from states like Texas and Colorado, and they are starting to opine on what does responsible use of AI technology look like. And they're, I think very indicative of what we'll see in the long run in terms of actual firm requirements by the federal regulators, by state regulators. And that's, making sure that you use the tool responsibly. What that means is, not clearly defined, but I think, drafting the legal contract that you're going to put in the borrower, AI is definitely not in the land of responsible use.
Right.
And Alex, one thing that from talking to Ginger, for me, it's like for the consumer's calling into a mortgage company. Will they even know they're talking to a real person? Are they talking to AI? Will they even know they're talking to AI as they're giving information? What are your thoughts on that from the consumer side in terms of maybe talking to an AI bot?
I think for one, that is a pillar of responsible use. So far, we're seeing disclosure as a very important pillar, making sure that people do understand that the work product that's being generated or the person that they're talking to or the interfacing with is AI, is not a human. I think disclosure is going to become really important as we continue, probably going to be mandated at some point, but it would be a best practice today. Again, I think this is a really powerful and important direction we're heading, being able to take the work out of some of the origination process. We all know how high the cost is to originate a loan today. Being able to reduce grow those margins, shrink the overhead by introducing a chatbot who can say like, hey, these are the docs we need from you. Oh, did an initial scan. Looks like we're going to need additional pay stubs, or you didn't submit the right document. That's incredible, right? Anybody who owns a mortgage company, I'm sure, is chomping at the bit to get to that. But before we get there, I think, really internally at this point, we need to set some standards for the way that we use things, and disclosure, from my perspective, is one of the most important standards a company can set, making sure that is clear to the consumer when they're getting started.
Well, and we talk about our tech stack, and often that is used in recruiting, right? It's like, what's your tech stack? What are the tools that you have? And as companies start evolving and accepting the AI technology is out there, and I know you do a lot of your work in fintech, and I'll share a conversation. I just had a conversation this morning with a client of mine who had been at an AI conference and said, I found this great technology, and I think it'll be, fabulous. It does this, this, and this, and this. And it's like, okay, what are the things that he needs to look at to make sure that he is protecting the consumer? And it's not just in the integration, but those are the kind of things. And I think that's where a lot of organizations are struggling right now. It's like, what's the vetting process that needs to go into place?
Yeah.
Or, bringing on an AI company, and those kind of things. So how can you help companies to be able to navigate through this?
Yeah, well, first, backing up, I think a cornerstone and something that everybody needs to remember is just because there are not laws governing AI specifically, there are still laws impacting the use of AI and AI vendors. Things like data privacy and security. The way that you are feeding information into these AI tools and giving to the AI vendors is still highly regulated. So, I think there's a little bit of confusion and people think it's the wild, wild west. It's not the wild, wild west. There are still ECOA requirements. There are still data security and privacy requirements that do apply to these tools. So that's thing number one, is treat it like you would treat any other vendor and understand, how you're being used or how you're using the vendor, whether they're a critical vendor and have access to all of your information and sensitive borrower information, or do they fall somewhere much further down the line, but treat them like you would treat any other vendor. That's thing one. Thing two is, I think especially with brokers, third-party vendor management or third-party service provider oversight tends to be something that is sort of a check the box, like, yeah, we've got to do it. Let's make sure that we run these guys through some sort of process that's, just getting them through the system so we can sign the contract and move on with our lives. Super exciting new technology. We all sort of need to pause because vendor management is becoming more and more important and the requirements more and more onerous as we go on. So making sure that we fully understand what we're looking for. It's not just to check the box, but we are really looking at things like, is the company actually able to handle our data securely? Are they an AI vendor and that they're actually building models, or are they a vendor who use AI? And if they use AI, what model are they using and how is that data? Sort of understanding the entire process flow. These things are getting more complicated, and therefore, again, the requirements should be more onerous. So I think taking a step back and looking at our vendor management processes and understanding, how to classify a vendor, and based on the classification, what we need to review to ensure that we are at least covering the laws that currently exist, and hopefully covering our internal policies in regard to how we use AI is going to become, just increasingly important.
Yeah, definitely. Matt, I see you thinking there's a deep thought going on there as far as where that goes,
There's just so much to this topic. It's taking over our everyday lives. It's going to be a tool that we're using, for mortgages, for our personal life, for this and that. And I was just sitting here. I love the response, Alex. It was very awesome just to hear you break down just the different style AI companies, what model are they using. Those are things that I never even was thinking about. And I had this big light go off when you were talking. That just extremely valuable information.
Yeah. Well, not just for brokers, a lot of, obviously, our audience with NAMB are the TPO vendors as well. And so from a wholesale side, they're looking at, okay, what are the tools I can use with AI for underwriting, for follow-up, for those kind of things. And so they have to think about their own production, obviously as TPO, but then also what are they doing to make sure they're protecting their clients, being the brokers. And so having that guidance is very important. I'm assuming you guys are working on something to be able to help through that, because this is, as you say, it's new, but there's all these regulations that are already in place that you have to bring in as well. So it's not just like, it's AI, it's okay, we can do everything, but all these other things. What should our TPO lenders be looking at?
Yeah, I think it's a lot of the same things. It's risk overall. So, how are we using it? Are we vetting appropriately? One thing I didn't mention before, but I think is particularly appropriate or important for anybody engaging with a vendor is, how are these things papered in terms of contract with the vendor? Are there contract parameters or flexibility regarding, what happens if, for instance, you sign on for a 5-year agreement with a tech vendor, and all of a sudden the use of the vendor is illegal because a new regulation comes down the pike, a new restriction comes down the pike. You want to make sure that you are, papering these agreements appropriately, so that not only is risk allocation clear, but there is some flexibility for, again, regulatory shifts, and we're gonna see it come. We know it's on the horizon, and when it comes, it's gonna come quickly, I think. So again, making sure that we paper these things appropriately. So I would say, from a risk management perspective, got to look at, how we're using these tools, need to look at the way we're papering the agreements with the vendors who provide the tools, and, again, vetting everybody appropriately.
Yeah. And what do you guys do? Mitchell Sandler, obviously one of the leaders as far as law firms within our industry. And I'm assuming that you guys are working on some of this. So kind of what's coming down the pike for you guys?
Yeah. So, some of the states are coming out with frameworks, like I said, Texas and Colorado being two notable, frameworks that have been published. And there are some real requirements for how you mitigate risk. Whether you're conducting risk assessments, whether it's internal policies and procedures, whether it's just defining, how you use AI internally. But we are working on a sort of a internal compliance management system audit for the way that you use AI, a risk assessment. to help you really understand, what are the applicable laws here,
Yeah.
what's best practice, how does the AI laws or rules that currently exist interplay with the other laws that have been in existence for a while, like data security and privacy and things of that nature. So sort of helping you understand and make sense of the complex landscape that's out there. That's something we're already doing currently and working on expanding and continuing to, advance and mold as new regulations come out. So there are proactive measures you can take like that, engaging with a firm like Mitchell Sandler so that we can take a look at this for you if it really is something that just overwhelms you. And I know everybody's coming off on the tail end of a really long stretch of high rates and low volume. For origination, this is, I think the last thing that people are concerned about. They love the innovation. They love the thought of, bigger margins and more efficient lending processes. But, the actual like nuts and bolts of how do we do it right? How do we make sure it's actually benefiting us, not harming the consumer is, it's a whole new world, a whole new landscape on top of an already hyper-regulated industry. So taking advantage of something like that is certainly something I would recommend, but slightly biased as a person who loves compliance, rules, and regulations.
Well, but I mean, it's important. And those are the things when you set it up correctly now. And, Matt and I, talk about this often. It's about systems. So, having that system in place on what you're doing for vetting, how the different regulations fit in on what you need to look at. And I'll use an example. We have a tool that we're looking at. I know NAMB's looking at it as well. It's called Macy. It's Macy 365. And it's a chat bot that actually does the phone calls for you, the follow-up for you, dropped applications. It's absolutely phenomenal. But with that, those are things you have to look at. What are the conversations that can happen? And how far can that go? Because, I had someone the other day say, do you think it'll ever get to the point that AI bots get licensed?
Yes. First of all, yes, I think that will be something. If you weren't asking my opinion, but I think that we will. And I also think that, having those conversations is awesome, but auditing those conversations is going to be really important as well, especially when we talk generative AI. How far can you take those conversations, and is the model breaking the mold or going too far? And, it's going to be something we have to monitor for sure.
Absolutely. And that's the thing to think about too, as you start implementing some of these new technologies, great as far as time saving, great as far as cost cutting, but then you also have to look, down the road, what are the possibilities that could get you into trouble? So being aware of that is very important, and something that's not new in our industry, obviously.
Yeah. Yeah. Everybody's used to the, rather broad definitions of what is origination activity and those types of things. But when you introduce something like AI, where we all know, if you work with ChatGPT at all, you know how advanced the models are getting and how quickly the conversations can sort of take turns based on the information that it's fed. So I know there are responsible vendors out there making sure that they build models that are, high and tight in regards to what, the bot can actually do. But that's why it's really important to make sure you're vetting the vendors so that you're working with them and not, a more immature company who hasn't quite got the model down yet.
And this is so refreshing to hear, just the thought out responses, the expertise, because, we hear so much in the media, we see so much on TV, the news about AI, and it's just awesome to hear, a company like you guys and what you're doing, and just you're ahead of the game. It's just very refreshing to hear as a loan officer. It's awesome.
That's really exciting for us too. We've been working in laws and regs for a long time, and there's always new, commentary, and like we talked about on EloComp, things are always shifting. The landscape's always shifting. But I think this is a new territory for all of us, and it's really exciting to have, not only the advanced capabilities that are, presented by being able to use things like AI and other technologies that are coming down the pipe, but also to sort of see how that shakes up the landscape and how we all need to fit within it to make sure that, again, the ultimate goal of customer satisfaction and protection, as well as, the profitability and advancement of the lenders in the space, all, happen together.
Yeah.
Yep, so true. So we, first of all, Alex, appreciate your expertise in coming on and taking time to do this. I know you're very busy, so we do appreciate that. If people want to get in touch with you and say, hey, you know what, I need help with this AI thing, or I have some other, legal issues, how can someone get in touch with you?
Yeah, I mean, I'm always available via email, 365 days and around the clock. But it's atemple@mitchellsandler.com. So feel free to reach out to me anytime. I'm happy to chat all things AI or mortgage regulatory compliance in general.
Yeah, that's perfect. And I know Matt, he's in charge of our young professional, and so our group there. So I think having Alex on maybe as a future guest there would be helpful, especially for those who are just new and starting out in the industry, to be able to have an idea as far as long term as they grow their business, whether it's into non-del or becoming a lender. Those are things important to think about to get into your mindset right now.
Absolutely, Alex. We would love to have you on our young professional call, and I'll get with you with some more information. But that's the next wave of loan officer. They're coming into the business as the AI is really getting started. And the loan officer who's using AI, they're going to be the ones really sticking around for years to come.
And they're the ones using it in their personal life, and they're going to have an expectation that they can carry that into their professional lives. I think we all have to be ready for it. And that's why, not to bring it back to gloom and doom, I don't think that's what it is, but that's why I think regulations are going to come in, fast and hard. We've got to keep up, and we're going to want access to these tools. So very exciting, and I would be happy to come and talk or be a part of anything that you guys have going on in the young professionals world. But it's exciting. I'm excited to see where everything goes and how we keep pace.
Awesome. I love it. Well, Alex, thank you. Matt, thank you. And for those of you who are listening, you can find us at nambpodcast.com. So make sure and check us out, and stay tuned for the next episode. So thanks, guys.
Thanks for tuning in to the NAMB Podcast, brought to you by the National Association of Mortgage Brokers. For more episodes, resources, and guest interviews, visit nambpodcast.com. Don't forget to follow, share, and subscribe, and we look forward to seeing you soon.